Tesla's a place where investors can find safety. Now, that's a very, very interesting statement. So looking forward to reacting to that one, because it's not usually how people really think about Tesla. Usually they kind of think of it as a kind of a riskier growth company, those sorts of things. So I'm going to look really forward to that one.
Capital markets analyst Tom Narayan has a 224 target and a buy rating on Tesla. It's good to see you again, Tom. I just wonder if you think any of this goodwill around this month's delivery number is deserved right now.
We're also seeing it on a relative basis, which is, I think, how most auto investors look at versus what's happening in the rest of the industry. This Stellantis profit warrant comes on the back of 3 other profit warrants from European automakers in just the past.
Hey, who called this? I told you guys, Tesla's going to be the first one to get hit, right? Sure enough, they were. And I said, just watch. As 2024 goes along, all these other automakers are going to get hammered. And how did I have the confidence to make that call before anybody made that call, right? Everybody was poking fun at Tesla so much, right? Saying Tesla's numbers are so bad, look at these other automakers. And I said, you have to understand the way the auto industry works and how Tesla works versus these other guys, right? What did I say? Remember, the other auto manufacturers, they sell into dealerships. It goes through a dealership model. So there was a lag there. Tesla goes direct to customer. So Tesla was going to get hit the first when obviously rates went substantially higher, right? And so in the back half of 2022 and certainly going into 2023, we saw Tesla start to actually face some real problems. Meanwhile, the other auto manufacturers look great all the way into the very beginning of this year. But you got to understand, dealerships were still playing catch up. If you go back to 21 and 22, dealerships were like empty on inventory. I'd never seen that in my entire life. And I'll probably never ever see that again. In terms of dealerships were so low on inventory, they would space the cars out 10, 20 feet apart from each other just to have a few cars in the lot. I mean, that was crazy. Now you go to any dealership pretty much in the United States of America and they're just loaded. The front of the dealership's loaded with inventory. The back of the dealership's loaded with inventory, right? So the other guys are now feeling that pain because the dealers are saying, whoa, man, like where are we going to put these cars? Like we don't even have any more room for them. And so Tesla felt it first. They're also going to be the first to recover out of this. And then guess what? The other guys are feeling it now and they'll be last to recover.
Couple of weeks. So I do think a lot of folks are looking for safety. Tesla, interestingly, seems to be a place where they can get that.
Yeah, some of the.
I don't buy that. People looking for Tesla for safety. No. If you're thinking about why the stock's been moving here recently, it's been moving for one core reason: 10-10. There's always a lot of hype and excitement going into any major Tesla event. We got 10-10 coming. It's not that long from now. And so Tesla's been showing strength going into that event. And don't be surprised if it continues to show strength. Now, after the event, as in 10-11 and after, I don't know. We'll see what happens with Tesla stock, for that next bit of time after that. But going into the event, there's always a lot of hype, always a lot of excitement. There starts to be some FOMO in the stock. And it's just, I've never seen it not happen.
Numbers out of like France and Germany for August were so horrible. Is there a share shift happening over there?
No, it's a complete market dynamic. You saw incentives get cut at the end of last year in Europe, especially in Germany. And also just pricing is just too high over there. You will get some relief in 2025, though. Remember, these OEMs have to make a very severe CO2 regulatory cliff, so that will come back. But definitely that softness in EVs is being felt very severely. We do think incentives will have to come back, especially in Germany. That should help a little bit in 2025.
I mean, deliveries this week, but then the robo-taxi day the week after. And I do wonder how much of this is optimism and excitement over that.
Thank you,
and starting
Sarah
to price in
Sarah,
what that might look like.
Yeah, that's fair, right? And the stock has run quite a bit. It's run, past my price target as well. Notably. So sure, folks are looking at optimistically on robotaxi and what that could mean. But that said,
is it just me or does every auto manufacturer look like it's flirting with going to single digits? Like Stellantis, Ford, all these guys, Lucid's already there, Rivian's pretty dang close. It looks like they all want to go to single digits.
Backdrop of what's happening in overall autos, I still think it makes sense to still be constructive there. And recall what's happening in Europe, for example. Next year, that regulatory cliff, guess who these OEMs in Europe are going to be buying credits from? Tesla. So I think a lot of folks look past where the price is, the share price is, and looking more towards sentiment and the narrative is autonomy. Sentiment is numbers beating. These regulatory credits are going to be pretty big. Then you have energy storage. Deliveries look like they're going to be fine. So on a sentiment basis, which is, I think, how this stock trades, I acknowledge it could be a sell the news type event, robotaxi, but the day. But I do think there's enough inertia now, given how the rest of autos is trading, that it could still catch some support.
So he's 100% right. 100% right in terms of how Tesla stock trades in the short term, that is, right? Long-term fundamentals. Short term, 100% sentiment. Like, if people are feeling great about Tesla, like, they buy the stock, and they don't care what the PE ratio is or the price to sales, or none of that matters. So, like, they're feeling good about it, they're buying. On the flip side, when the sentiment's really poor, people just dump out of the stock left and right. And you saw that even earlier this year, the stock went to, $100-something a share. We obviously watched back in late 2022, going into 2023, stock fell all the way down to $101 at that particular time. So this is what happens. Like sentiment gets really positive, stock goes up. Sentiment gets really negative, stock goes down. The long term, we'll see where Tesla heads. But the moral of the story is, in the short term, it's all sentiment game.
A return to the highs on Tesla anywhere in your modeling right now?
Yeah, I mean, look, my modeling is very conservative. I don't include any optimists, which is, by the way, coming up a lot in questions. Folks are starting to look at that. My robotaxi numbers, I think, are quite conservative, $400 billion of value. I think this could expand autos well beyond the $2.7 trillion level. So the upside is significantly higher than where my price target is. And definitely you could make a case, obviously, for where the stock is trading. But again, I don't think folks are doing the math on DCFs on this game, right? No. They're looking at catalysts near term, and there are several. And I do think folks will continue to be excited on the back of the robotaxi event.
Tom, appreciate it. We'll see what we get on Wednesday. Good to see you again.
Hey, it's Jeremy. I hope you really enjoyed that clip here today. Listen, there are three main areas a long-term investor has to understand. You have to understand financial statements, income statements, balance sheets, cash flows. You have to understand and master portfolio management. And you have to have the ability to project what is possible for companies in the coming years. Bearish scenarios, bullish scenarios. All these skills can be learned, and that's the good news. And I'm still just a regular guy who's out here. I just have a lot of passion for the market. I've learned a lot over the last 15 years. I had a tremendous amount of success, and I have a dedication to teaching people everything I have learned in the past 15 years. If I can do it, you can do it too. You can learn all that's required to become a great investor in my private group. The application is going to be down there in the description area. You can click on that, fill out an application, join us in the private group, get access to all my best course curriculums, teaching you everything that I got in my head, and you get ability to join our 6-figure, 7-figure Hall of Fame. We have such a tremendous Discord. It is incredible. So once again, description area down there, there's a link. You can apply to join my private group in there. Let's hear the one about PayPal.
Mad Dash of the week. Want to talk a little PayPal?
After I praised you on EchoStar, your head got bigger.
Yes.
Although that was that tie was a disaster that you're wearing.
Back in 2001?
Yes.
Yeah.
I got to do it again. You had this interview with this guy, Alex Chris, at PayPal, and a lot of people kind of didn't think of it. It was right back here. Didn't think it. I watched it and I said, holy cow, this guy's going to energize this company. He's going to make new deals, maybe makes things fly with Amazon, maybe he talks about cross-border with China. Well, David, this is the best performer in the NASDAQ, and it should be. Why? Because a new CEO has come in and really energized this place. Talking about Venmo being involved in a lot more places, Apple. And I have to just talk about how sometimes a new CEO can come in. And we saw with Brian Niccol and Starbucks. Now that a lot of it is hope because he came in from Chipotle. This was just, let's grind it out and figure out new ways to make money and make new deals. And I know that Dan Schulman had made a lot of deals, but then the company kind of fell. It's back, and it's back because of this man.
Alex Chris, you're talking about, of course. I think it was more towards the beginning of the year.
Right, well, I'm just saying that it was
and then
slow.
it's been, but you're right. I mean, and he did promise.
He did.
He did say, things are going to change. Right. Now, of course, to your point, they don't happen overnight.
No.
And there's still plenty that hasn't happened.
But the interview was seminal because, frankly, I said, oh, my God, I got to look at this thing. This thing's been a disaster. No more. And I think he set the ground for a lot more good. I would not sell the stock.
All right. as you see, up 33% for the year. So we got PayPal as a mad dash. We got an opening bell in just a...
So, I mean, the phenomenal news for PayPal is it's still just so early days in regards to this Alex Chris recovery. I don't really want to call it recovery. It's just getting the company back on the right track with investors and with their customer base, right? Business owners as well as individual consumers, partnerships, all those sorts of things. Like he's just about to hit, I believe, 1 year. It was either September or October, if I recall. He was brought in last year, so he's either hit 1 year or about to hit 1 year. Imagine all the progress year 2, year 3. You could actually see tremendously more progress year 2 and year 3, because you got to keep in mind a lot of year 1 is just kind of like learning, trying to figure things out, get the ship pointing in the right direction. The execution could actually take another level higher actually in year 2 and year 3. So it is something to factor in here. We're still like very early days in kind of this whole kind of exciting cycle we're going through, and just started here in regards to PayPal, which, it's a big position for me. It matters a lot, and I'm very excited to see what transpires from here. Hey, it's Jeremy. I hope you really enjoyed that clip here today. Listen, there are 3 main areas a long-term investor has to understand. You have to understand financial statements, income statements, balance sheets, cash flows. You have to understand and master portfolio management. And you have to have the ability to project what is possible for companies in the coming years. Bearish scenarios, bullish scenarios. All these skills can be learned, and that's the good news. And I'm still just a regular guy who's out here. I just have a lot of passion for the market. I've learned a lot over the last 15 years. I had a tremendous amount of success, and I have a dedication to teaching people everything I have learned in the past 15 years. If I can do it, you can do it too. You can learn all that's required to become a great investor in my private group. The application is going to be down there in the description area. You can click on that, fill out an application, join us in the private group, get access to all my best course curriculums, teaching you everything that I got in my head, and you get ability to join our 6-figure, 7-figure Hall of Fame. We have such a tremendous Discord. It is incredible. So once again, description area down there, there's a link. You can apply to join my private group in there. Wynn Resorts. So this is a truly great company. Stock price up about 8.5% over the past year. It has obviously started to skyrocket recently. And when I say recently, I literally mean in the past month and a half. Stock has absolutely taken off like a rocket ship. So what is a truly great company? I ask you that. And here's, to me, what a truly great company is. If you're a truly great company, you have top tier product and service, which is certainly Wynn Resorts. They are the creme de la creme. They are top product in the resort category, period, in the world. You have top tier management and employee force, which certainly when you really look at their employee force, they're top tier. You have top tier financials versus your peers. That would definitely be Wynn as well. And you can make it through anything. And if I think about Wynn Resorts, they made it through the great financial crisis and got out to the other side stronger than ever. They made it through the China crackdowns, and they made it through stronger than ever. They made it through Rona, the worst possible situation that could ever happen for their business model. And they made it out to the other side. All these situations, the highest inflation in decades, they always make it through to the other side, and they emerge stronger coming out of that than when they went in. And that, to me, is a truly great company. That's Wynn Resorts. And guess what I want to hold? I want to hold truly great companies. This is a Wynn Resorts portfolio. They have 5 owned properties. Those would be a Wynn and Encore in Las Vegas, be the Wynn and Encore in Macau, and Wynn Palace. They're granddaddy of them all in Asia. They also have 1 property they manage, so they don't own that property anymore. They sold off the actual property, but they still operate inside the property, right? And they still, run the place, and they still make, respectable money from that. Encore, Boston Harbor, and that's that property. And then they're building this one in the Middle East right now, which is a crazy big opportunity because nothing like this really exists in the Middle East. And there's so much money. Oh, there's so much money in the Middle East, especially big money, the type of money that Wynn Resorts really attracts as very high net worth individuals. And so that property is going to be a very special opportunity over the next 10, 20 years as well. That property, by the way, is not open anytime soon. Probably opens in, I would say, 2 years or so. Now, I know a lot of people watching this video, you've probably never been to Wynn, so you haven't experienced it. Okay, let me run you through a night at the Wynn. So last night, I was at the Wynn. I was actually sitting at this bar right here, okay? And this is at a Mexican restaurant, Casa de Playa or something like that, inside Wynn Resorts. And so at the Las Vegas property, I was right there, right, with my friend. And right here, some folks are there. kind of a hot shot in a suit right here, making sure him and another guy making sure they have their own personal like bartender concierge type deal, and making sure the champagne bottles are the right ones, because they're kind of like entertaining these folks here, they're entertaining folks back here, right? Spending easily thousands of dollars, if not a lot more than thousands of dollars at this particular Mexican restaurant, because they were with likely some other very high net worth individuals, and I don't know if they were trying to show them a good time or what they were trying to do, but they were definitely going to impress them. I'll just put it like that. Meanwhile, you have the highest end poker going on really in the world inside the Wynn and Encore, just slightly down, slightly away from that particular restaurant. Meanwhile, there's some 70-year-old who loves to play the high limit slots, who's playing $100 a pull right there. Meanwhile, in here, you got some guy from Shanghai who's in Vegas for the next few days, who's dropping $10,000 a hand on some high-end baccarat. Meanwhile, you got a kid that just turned 21. He's coming in from Los Angeles on his daddy's private jet. His daddy gave him $20,000 to spend for the weekend. He's going straight to Excess, the club that is pretty much the most profitable club in the entire world. And he's going to go spend with his 5 friends. They're going on their daddy's private jet. They're going to go drop $10,000 easily on bottle service at Excess. And meanwhile, the 2 doctors that are in Vegas for their 10th wedding anniversary, they just showed up at a room, and there's a bottle of champagne waiting for them, and says, welcome to Wynn Resorts, and thank you for staying with us. Enjoy your 10th anniversary. That's Wynn. So, look at this here. This goes to show you the trailing 12-month revenue of this company. Clearly, it's back. It's back. We're in full gear, moving forward now at this point in time when it comes to Wynn Resorts. Vegas properties are rolling. The Boston properties rolling. The Macau properties are rolling. Asia's back. Vegas is back. Everything's back now at this point in time, right? And of course, the U.S. economy is going to be stronger at certain times, which is going to benefit or not benefit the Wynn properties. The Chinese economy is going to be stronger, not stronger. It doesn't matter. Wynn's going to still put up their numbers regardless, right? Now, in terms of Wynn Resorts, the major profits are back. It's not just that the revenue's back. The major profits are back. The dividends are back. It's an exciting time for Wynn Resorts, right? And keep in mind, when it comes to Wynn Resorts, they're way more profitable than it seems on surface level. So after I left the Mexican restaurant, sitting outside with a friend at the waterfall show, had the best seat in the house. I loved it. And I was just looking at the property for a moment. And as admiring the property, I just had this thought of this property appreciates over time. If you run any rundown little hotel or something like that, your property does probably depreciate over time. Now, when it comes to depreciation and running depreciation, right, it's a non-cash expense really, but it makes your profitability, your net income, look a lot worse than it maybe really is, right? Now, running a traditional rundown hotel, you have a lot of depreciation because your useful life, if you don't really keep the property up in a nice condition and all those sorts of things, and if it's not in a great location, that hotel, you might have spent $30 million on it, but by the time it's done its useful life, 20, 30 years from now, it might be so run down that it's just a tear down, right? And the only thing of value might be the land. Wynn Resorts is different. Wynn Resorts properties, or if anything, in my opinion, have appreciated over the years. Those properties are worth more than they've ever been worth. Like if I think about those properties 10 years ago, I think they're worth even more now. Not just because the underlying land has gone up a lot, but because the building cost has gone up immensely, and they've kept those properties as top tier and as high end as you can possibly think. And so given all that, I believe those properties are more valuable today than they were 10 years ago and 15 years ago. But Wynn runs all this depreciation, so they don't have to pay a bunch of taxes, right? And meanwhile, I don't think those have depreciated. I think they've appreciated, which is absolutely pretty epic, right? And so the earnings per share, just keep in mind, if they didn't run all this depreciation, the earnings per share numbers would be dramatically higher than where they are. If I look on a trailing 12-month basis, depreciation and amortization for Wynn Resorts is around $700 million just in the past 12 months. And so keep in mind, I do not believe their properties have depreciated $700 million in the past year. If anything, I think their properties have appreciated in the past year. And so just keep in mind, whatever net income you see for Wynn Resorts, whatever earnings per share you see for Wynn Resorts, the reality is, in my personal opinion, it's actually dramatically higher. But they get massive cost savings from doing this depreciation over time. You might say, well, they have to recognize that if they ever sell the property. Sure. But are they ever going to sell these properties? Of course not. If you know Wynn Resorts, they're not going to sell the properties. Like, what the heck are you doing? They might sell the underlying piece of land. Maybe that makes sense, and just be the operator of the property. But they're not going to be interested in selling the whole enchilada. It doesn't make sense. So they're likely never going to have to pay that big tax on a gain of selling this property. So, I think there's a lot to be excited here on the more you understand it kind of about the financial statements and whatnot, right? So Wynn Resorts, here's kind of the numbers I ran. So I ran an average of 10% revenue growth on average a year over the next 4 years, so 2025 to 2028. They could do a bigger number than that. That's just what I felt comfortable with, okay, 10%. Now, net income growth, I think it'll be around 15% on average over the coming years. Net income margin's about 9% on this one, right? Because remember, their net income is very negatively affected by that ridiculous amount of depreciation they do every year. So, moral of the story is I think Wynn should command somewhere between a 20 and a 30 PE, which gives this company around a 16% CAGR on the low end and about 28% on the high end for Wynn Resorts, which is, in my opinion, very, very attractive for a company like this. The Middle East opportunity is that's one of those insane potentials there, right? Now, by the way, Wynn could potentially build property in Manhattan. They might build another property in Asia somewhere. I don't know. There's a lot of talk about potentials. I don't know. We'll see what happens there. But the only for sure that they're building is in the Middle East right now. Now, biggest important thing to keep in mind in regards to Wynn Resort stock, don't get excited or carried away with all the China-US stuff, because so much can be made of, what's going on in the U.S. economy, bad, good, blah, blah, blah. The Chinese economy. So much can be made of China's economy is good or stimulus or no stimulus, and everybody gets carried away with this stuff, right? And at the end of the day, just understand rich people still have money, no matter what. Like, rich people still are going to be rich, okay? And so don't get carried away with all the talk about the economy and those sorts of things. Like, own a company that's going to be so strong, it doesn't matter how the economy is doing because rich people are still going to be rich, right? Now, in regards to Wynn Resorts, here's the buy prices I look at for the stock. Low of the boat is under $100 for Wynn. It's always been that. Strong buy is in that $100 to $120 range for Wynn Resorts. Slow down on the buying from about $120 to $140. And this stock is a don't buy over $140, right? And of course, that's over the next year. 3 years from now, it might be very different buy prices. 5 years from now, it might be very different. But that's, if I'm thinking about this stock over the next year, those are kind of the buy targets and what I'm thinking in regards to Wynn Resorts. So very exciting.